Hello traders, today is June 28th, 2016, and we are going to look at crude oil. As some of you remember, yesterday we went short on crude oil at the break of this low. There was a nice continuation pattern of the move down on this hourly chart, and just let me point it out for you guys. As you can see here, well, we were in a very strong down move, then we started to trade inside of this triangle, which also acted as a continuation pattern, and we went short at the break. We actually got stopped out on a win when we trailed our stops right to this level. But that's not what we're here to talk about. What we're here to talk about is this bullish pressure that we are seeing right now. And if we zoom out on the chart, and maybe if we go to the 4-hour chart, I'm going to show you the levels that we were actually planning to hit. Well, not that we were planning to hit that, but we were expecting price to hit. Okay, these were the levels that we were expecting price to hit, and as you can see, our targets missed by a couple of ticks, which well, it actually sucks because instead of making a cool 120 ticks on the trade, we only made around 65 ticks, but still it's a very nice result. But what I wanted to show you here is that this was the very strong level that we pointed out on yesterday's trade room, and as you can see, we did have a very well, a very strong reaction. There were a lot of buyers coming into this zone, and price has continued to move up. Now our short bias has well, it's no longer existent, but because what we are actually aiming to do is to go short again at a higher level. Well, it seems kind of crazy that we are trying to short crude when we are currently in a very, very strong, well, bull market. And we haven't gone below the bull bear zone on the 4-hour chart. Remember that the bull bear zone is the zone that will uh, act as a complete bias change for the medium term price, well, for the medium term on the crude oil prices. But what we want here is maybe to look at the reaction of this level, okay? Because not only this level has been tested quite strongly in the past, you can see that it was tested here. After we broke to the upside, it was tested once, twice, then it was faked out of, and if we zoom in the 4-hour chart, so you can see that right here we had a lot of volume and a lot of sellers trying to break price well, trying to break with this level, but buyers kept pushing price up. Again, another long weak candle. Remember, you can always find out or you can always find clues on price action. But what we want here is a definite reaction to these levels. We do have some alerts on our trading platform. We have an alert right here at the 47.27. We want, because we want to look at the level when price hits it, and of course we have one below the low, because if price doesn't hit this level and starts to come down, we want to look at what's going to happen with the overall bull bear zone. Now let's zoom in a little bit, and let's talk about what our plan is going to be. Well, our plan is going to be easy. We're going to see the reaction on this level, and right here we would have a very nice better than a 1 to 2 risk to reward ratio in our hands if we try to short this level and we aim again at the bull bear zone. Remember that well, our stops are going to be around the 48 level and our targets around the 45.97 level, but that is just an assumption on what can happen if we have a reaction, a bearish reaction to this level. For right now, we are keeping our hands away from crude, and we are waiting for that to happen.